Goldman's one of the best franchises on earth, but it sells less than 9 times earnings, for heaven's sake. So you say, well, why don't we own it for the charitable trust? Well, as we said in our morning meeting, because Morgan Stanley exists. And I'm a big believer in diversification. Don't need to have 2 investment banks in your portfolio. Now, under the leadership of CEO James Cramer, this company has totally reinvented itself, going from a kind of a boom-bust operation before him to a much more consistent enterprise focused on asset management. This is looking less and less like a bank and more like a service company. On Wednesday, Morgan Stanley delivered a nice top and bottom line beat with a 6.8% revenue growth that outstripped the increase in expenses. We want that. At a time when everyone's worried about costs, these guys have excellent expense control. Meanwhile, the investment banking business is on fire, and wealth management's doing great too, especially on the asset management side. Oh, and they're aggressively buying back stock. What's not to like? Finally, also on Wednesday, quizzical, Bank of America reported, I liked it, solid numbers. Revenue's basically in line, but the earnings came in higher than expected, though much of that came from a big reserve release. Still, there were no negative surprises. Sales were up 10%, while expenses were only up 6%. They're very good, right? Exactly what the street needed. Better than the other guys. Bank of America is talking about holding expenses flat, unlike J.P. Morgan. That's very, very important when we try to figure out what's going to drive situation, and you can see what happens when they look at how much money they're making on this much revenue. It doesn't matter. The street was traumatized by J.P. Morgan expenses, not Bank of America. Bank of America is talking about holding expenses flat. Now, again, what this matters, just so you know, is they're a very digitized bank. These guys, not as digitized. That's what we're talking. Like Wells Fargo, Bank of America is highly sensitive to interest rates, which means it's in a great position for 2022. If the Fed raises rates 4 times, they're going to make $6.5 billion more than if the Fed does nothing. And it's risk-free to them. The only reason we don't own Bank of America is for the trust is, again, as we talk about in our morning meetings, we like Wells Fargo. Bottom line, the banks are all over the place this earnings season, which just goes to show you the importance of individual stock picking. All banks are not created equal, and when you get these big sell-offs like today, where everyone just says, woe is me, take a look at how well this business is performing.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.